Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
Doing pretty well. Thank you.
Yep, the markets are treating you well and treating me well, so things are good.
Mhm.
We are recording here Saturday, September 3rd. Yes, we're already in September. And on today's show, we're going to cover the Big Five with Barrie, which is S&P 500 mini futures, bonds, gold, crude oil, dollar, and the euro. And then in commodity land, for me, it's only the grains, and it's an interesting review that I'll talk about once we come back and ready to review the commodities. I'll describe what I was seeing and what may be coming. So we'll do the Bitcoin now, and then we'll do the NQs as well when we come back. Bitcoin is interesting from the standpoint of this week. As I was looking at the chart, I saw this pattern that from early to 2022, which seems to be repeating sort of on a more compressed or condensed version of it.
Mm-hmm.
But the pattern is there, and we're coming down out of it just like we did here. And if we go sort of high to low, we're essentially looking at about 3,000 Bitcoin. Don't know that it's going to do that. In other words, if we go from this high to this low, coming out of this pattern here, similar distance would take us to around 3,000. I think that's a little aggressive. I'm a little more comfortable with where these ABCs end up, or in an extreme case, around 6,800 on the full square. But the pattern's there, and the fractal's there. Let's watch it and let's see what happens. Anything else to add on Bitcoin other than it sort of continues to ratchet down, go sideways, ratchet down, go sideways? That appears to be what we're doing.
Yeah, it just looks weak and sort of a sloppy, bearish trend. And the square putting the ceiling up there, and let's see where the floor comes in. I think that half square is a good point, and also 3/4 of the square, which is pretty much our full target box.
Mm-hmm.
What is it, 10,000 or so?
That's like 9 to 12,000 is the target box.
Yeah, that's reasonable. And then if everybody panics, then probably go to the other your other target below, right?
Yeah, that's possible. I mean, it's definitely not bid. It's definitely not something people are piling into. It may appear that it appears like we may get that sort of panic flush at some point. But we'll just have to see how it plays out.
And just for the record, we've been bearish since the high came in. So
right in here.
Well, when the high came in, we had 3 drives. Remember that on the weekly? I believe.
Oh yeah. It was all there, and came in on the half square.
Mm-hmm.
And then this was the death knell. We lost the full square and came back and tested it and could not do it, and that started it. That started the speedy decline. So, all right, let me throw it over to you. Remember, please, to like the videos, share, ring the bell, do all the things that YouTube wants. If you like it, put comments in. I think Barrie said we had the most comments this week of any week. We appreciate the comments because we take the feedback seriously, and we try and incorporate any useful feedback into changes in how we deliver the weekly video.
And if you guys have levels that you want to share, it's a good place to do it in the comments.
Sure. Also, speaking of levels, we'll put out the spreadsheet. We have all the levels from the show on all the markets, even the markets we don't cover on that particular show, are on a Google Doc spreadsheet, which we will send the link for the updates on that along with the video when it's ready later today. Let me throw it over to you and let's get started.
All right.
There's the mini man. Look at that perfect back test on the full square before it gave it up.
Right there.
Yeah, it's fantastic.
Yeah, that's good. All right, we're out, and we had that number. We had given it out weeks ago, so we had that sitting there. If this is the first time you guys are catching the show, watch the last week's, or even more if you want to catch up, and that way you'll know, because we kind of start off each week from where we left off, and by watching the previous week, you'll be caught up. And there are chapters for all the sections that we cover, so you guys can drop down to the description and jump to whatever section that you trade. But I would say watch everything, because everything is sort of connected these days, and it's good to see how the ebb and flow of things.
It's almost one trade anymore. I swear to God. Everything's keying off the dollar, and when the dollar does something, everything reacts. Anyway, that's the discussion we can have later.
Yep. All right. So we were looking for basically to sell any counter trends that we were weak below 41.25. And I think I said, let's watch to see if we can get up there. That'll be major resistance. Of course, we couldn't even get above the quarter of the square. So it was super weak. Well, continue to sell. And we were looking for this ever since price was rejected at the square of 72 up here. And we were looking for support around 39.40. And that's pretty close to the 50% of the square here. And and somehow that's where we sort of found a little bit of support. So going forward, I would say next week, if we can't hold this 39.40, we're probably going to go down into major support is around 37.80. Okay, so it's right in here, and there's some minor support around 38.25, which is it's still ways down. So we'll have to probably cover this, get down to this level. And if that major level, which is 37.80 goes, I think we're looking at new lows, and that would really set in the panic.
I was going to say, if we take out those lows and clear them, this could really speed up to the downside.
And last week we talked about, I said if we can't make it up here, I think it was on Twitter, we probably got 100 points clear to the downside, right? And which we seems to have. And the other thing is we're coming up on about 180 degrees from the high, right? So that's a crucial point, and it's possible that we just dump into that. And that cycle is, well, exact 180 bars would be around September 13th. So give or take a couple of days on either side, and that would give us a 180. So that's an important time cycle. We only get, on a square of 90, we've only had one prior to this, right? And if you look at it in degrees, it's about 252. It falls in with the square of 72. So this is a sort of important deal. And we had this 45 in time going up into it. We sold off. Here's a pullback, and so it's in a weak position. I think, let me put in the two levels we're talking about. It would be 37.80 would be major support. 38.25 is also support, but it's sort of minor. They're not too far away, actually. On a good day, it could be that in a few minutes. But you can see this is the area where, if we're going to hold, that's the area where the support would come in.
Right.
And if this area gives out, then we pretty much have, what do we got down here? Around, well, we're into 36 by then. So that's what we have to look forward to. The number to really watch is at 39.40. We want to be able to hold above that, like here, see how we got above, and just one quick pullback and recovered, and then we ran out. So we want to see it holding above that. And obviously then we have to clear 4,000, which is a key level. And, you can see Friday, we popped above it just a little bit.
Tried and couldn't do it.
Yeah, it was failed there. So yeah, that's sort of my take. It's on the weak side. It's weak below 39.40, basically. And so a minor support 38.25. And if that gives out, 37.80. And if that gives out, then I think we got new lows coming. So hold your shorts if that happens.
Literally.
Some of them, yeah, really. All your shorts.
Right. The interesting thing to me is that if, that 39.40, if we don't get above that early in the week, momentum's really going to kick in on the downside. I mean, I think we'll see some aggressive selling come in if we get stuck under.
Yeah, I would say so. I would say so. But these levels are super critical at this point. I'm just trying to see the square of 60 just to see if we can see the thirds of the 90. So it came down 120. And if we make a low at that 180, we have we have a 60 low to low going in. So there's another cycle. And we'll have about 72 degrees, more or less, low to low coming in. So there are some cycles coming in next week. So it's possible we get some kind of a low and another bounce, another counter trend. But this pattern is really kind of a wacko pattern going into next week. And we'll see how it works out. And you guys have the levels. Let's look at the weekly.
Cycles aren't exactly benign next week either.
Yeah, very active.
Yes.
Okay. Weekly is it's important to look at these. The level I had on a weekly basis that it's been on these charts for a couple of months, I think, or at least a month or so, was this 38.96 basis the weekly chart. You can see how we came right to it and sort of held. If that goes and we get a close below that basis weekly, so let's say next Friday's close is below that, then we're definitely in weak grounds. And if 72 goes, we're probably going to go for a 90 down. And because that's the next.
Right. Where's your 90 down?
So the 90 would be around 33, let's say 33.50, 33.60. Pretty much the high before the crash, right?
The COVID crash.
Yeah. So it was right before that. So it's around that. So that, isn't that interesting? That's 90 down from the high. It also happens to be sort of support area up here.
Perfect structure.
From that high. Yeah, it's good structure. And it's about 50% of the block here. And that 90 just happens to, fall there. So far we're holding this. So 38.96 going out and not being able to recover that would be a sign that we're probably going to do, take out this low. If that happens, then we know we're going to probably do 90 at some point. And if we're going to do 90 down, 90 bars down, that would come into middle of November.
That's good
90,
stuff.
45 weeks down that'll be middle of November. So,
geez, I wonder what's happening in early November that could cause a panic.
Yeah, I don't know. I'm not even looking that way. Okay, on the other hand,
have a little thing called the midterm elections.
Yeah.
That might have something to do with the panic. We'll see.
Well, here's the other thing is if we're still working the square of 72, then 36 weeks would be September 19th. And that's very interesting because I know we have a bunch of cycles coming into that.
Yep.
So it's possible we make a lower low on that, or we can make a little bit of a higher low, maybe a false break here. Either way, those are times that are ahead of us. So we'll talk about them when we get closer. Anything else? That's it, right? That's good enough.
No, I think that's good coverage. Yeah.
We got the levels. We know where we're going. So
got the levels, got the timing. What more could you want?
Not much. And if you guys follow us on Twitter, we update these practically every other day or every day, so you can catch a lot of the updates there. For example, we caught this high very close to the high in real time, so those are the kind of things we can't really do videos in real time. So if you want to follow us there, we post what we see. Moving on to bonds. We left off talking about how the market's going to be weak below 137, and that's pretty much what we got. And I said, I think if 137 goes, we're going to go back and test 132 and probably make new lows, and looks like we're on the way.
Yeah, I mean, I got to admit, I missed that sell, man. That thing set up, and I didn't take it. It was there.
Yeah, it was a good one, and you got to watch this. I mean, it tried to shake you out. There was a lot of shaking going on at that level. But after that, it was to the downside. I mean, the whole thing was a shakedown, right?
Yeah.
It wasn't just a easy slide.
I mean, off this turn, that turn at the high that up near your 147. That's where I missed it. Yeah, that was a good
here, right?
Yep, that was a good sell setup.
Right. So the next target is really around 132. If that somehow slips up, then I think we're looking at new lows. So we'll talk about that when we get there. For now, we're on the bearish side. There's really no
weak. Yep.
Yeah, it's weak. I don't think I saw. So we got the 50%.
Getting stuck under it.
It's right there. It's possible we test here and fail.
Yeah.
But either way, 137 is the key level. So we might, even if we get 1 or 2 day bounce, it's still weak. And looking at the weekly bonds, we left off talking about, well, a few weeks ago when we were at 141, the basic thought was if we can't stay above that, it's, we're probably going to go visit the old lows, and that's what it's been doing for the last 3 weeks.
Mm-hmm.
And looks like it's going to continue to do that. So that's 1, 2, 3, 4 weeks down. It's possible we have an inside bar in here or some kind of a correction, but looks like we're going to test the lows.
The interesting thing in preparing for the monthly show, which we're going to be recording also this weekend and posting, I noticed we had our first monthly close below that 40-year trend line.
Right.
On bonds.
Yeah.
And we'll go over that on the monthly show, but that's significant. That's big.
Yeah, it's a big deal.
Mm-hmm.
It's a big deal. Yeah. So bearish on bonds, looking for any kind of a retest to be any kind of a counter trend would be, any sell signals coming off of counter trends are a game here, as long as it's below 137. That's where we'll leave bonds. Looking at crude, I had dropped this circle a couple of weeks ago. And the idea here is that long as it's within the circle, that the price is weak, and the breaks are probably to the downside until we leave the circle. And you can see how this test last week, came up to this our level of 97. I've been talking about. It's really 91, 97 that we were watching, right? So you can see 97. We went up to test it, just failed. Very close to the circle, but not quite there. And we came right back down to the bottom of the band, bottom of the channel. And so this is
desperately trying to hold on.
Yeah, I don't see how that's going to happen now. we had plenty of time to take care of business. We didn't, and now it's just very weak. And we're probably going to do that 73, but we'll see. 83 first.
Mm-hmm.
First things first. And of course, we get the down channel. It's possible that might hold it, but the way it's set up now it's super weak. And long as it's till we break out of this, the bigger circle, it's in a weak position. It's just weak, and you don't get to draw up perfect circles that often. So when I see one, it's good to see what happened. Just kind of play it out all the way. That's why I'm leaving it in there. Mm-hmm. And so we've done, I've been using the square of 72, and you take the next quarter of the square, that's where we've been finding support. And that's 18 degrees. So 1872 gives you 90. And that's the square that, Ben, you brought up a couple of weeks ago.
Yep, the 90.
So if you put the 90 on that, you can see, that's where we're holding. And so this is the thing, right? If the 90 goes, we're going to get a swoosh.
Yep.
It's very possible. The maximum push beyond 90 without really a bunch of damage would be around 83. Okay. It can go in there, do a false break, clean out any stops down here and try to take off. We have all these old highs up here giving some support. But boy, you break through this and we can't really recover the 90, we're probably just gonna, who knows, maybe even below this, right?
Right.
But that's the next support level.
It's interesting too. It's interesting you said that, because I was looking at when I was doing the review, and you could look, we've got 1 drive, 2 drives to the low on the 90, and we could be doing a 3rd drive. And I said, if it's bullish, it'll have to hold like 81.75 support.
You mean like right there?
Yeah, something like that. Yep. And if it could hold that, you'd have a 3 drives in place. And now we've got a good marker of this 90 that we'd have to get back above to say, okay, you got a shot here.
This line here. Yeah.
Yeah. So we've completed 2 drives, and now it looks like we're working on the 3rd.
Okay, there you go. Let's watch that. It's hopefully it's not too many.
Mm-hmm.
But clearly I'm giving up on this channel, so I'll just delete this one. That's
right.
Not in play. We had plenty of time to take care of that. So everything seems to push down, but the square 90 or that 72 with that quarter is the key, which is really around the 80, 85 area.
Mm-hmm.
but 83 is really sort of the level we want to watch, although this is holding. So we could break here, as long as it's above 83, there's still potential that we could hold. But if these kind of go quickly, then yeah, it's going to be a swish.
Yeah.
Right into 135 days off the high. So that's a cycle, and that's around that's September 12th. So did you notice September 13th on the other one, 12th
Yeah,
here?
yep.
So we could be in for a good run here.
Nice.
Looking at the weekly crude. So here we really had a good heads up early on. We looked at this 90 degrees up to the square of 45, and we talked about how, when I bring up 97, it's really here. This is where I get that off the weekly. And what we've been talking about is that if we can't really clear this level, which is then, market's weak, right? Weakness. Now, we've been here for a while, and we dropped this box in here to show this is sort of the zone that it needs to. If we're above here, we need to work this area. If we're below, we need to work this area. And we started to break under that, the bottom of the range. So last few weeks, you can see how even last week we spent half the time above it, half the time below it, right? But the whole thing is, you can see it down, red bar, white bar, red bar, white bar, red bar. So just consolidating here. And last week, it's basically it's an outside bar, outside reversal. Yeah. Right. It's outside of this previous one. So to me, at a point like this, below this square of 90, it's looks bearish.
Yep. And
even though we're holding this the steeper angle, the channel here, so for next week, the bottom of the channel is around 82.50, which jives with our 83 number. So it's possible we dip into that. If that goes, then we get into the 73 number, which is really about square and a half, 67 area. So yeah, it's not quite time to buy, and the breaks should be to the downside, long as if we can hold. Not if we can't hold, we're below 91, man. This is weak.
No question.
This is weak all the way to 83. That's all. All right, moving on to gold. This is the gold daily. I was messing around with this, found this fork or the channel to be fairly decent. Yeah, it looks good, and so we'll keep it. What else did I want to add here? Well, it's also weak. We had a couple of levels here. I drew this box in a while back, and you can see before this drop, the counter trend held right at the top of the box, right? And we turned down, really couldn't hold above 1730. We dropped below that, and so 1730 for next week would be a resistance, and the big support is around 1676. Let's see, and looks like we're probably going to get there. So that's the story on gold. Basis daily. Let's take a look at the weekly gold. This is our long-term chart, I guess. Coming off the lows in almost 2000. So just to show that we're holding, I would say a positive holding pattern. Consolidating above all these other old highs. So this is the thing to watch. We got 1670 is pretty much the max support. If we can get down there, there's an ABCD that lines up right there, this ABCD here. And if we take that out, boy, then I think we have a little ways to go till gold gets into bullish territory again. Now we had this run up, on the initial run, then we had this run up recently. And the fact that we haven't done much is okay, long as we're holding above these levels. But if we take out this 1670, which looks more and more probable, since we really can't make above, so 1767, 1750, that area is major resistance now. And so those are the numbers to watch for next week. All right, looking at the dollar to the moon.
Yeah.
So dollar's bullish. That's all I gotta say. We had 107 peg for a while, and that's 144 up, and basically said once it clears that, we open up way all the way to 111, 112, and that's where we're looks like we're well on the way.
And notice the pullback couldn't even get to the full square.
Yeah. So
You
it's
you
strong.
made air between there.
Yeah, it's strong.
Mm-hmm.
And if we were to up a little ABCD in there, that will put us about
Just above the half
112.
square. Yeah.
So 111, 112 is sort of the next target that we have. And I would just keep that in mind. Here's a weekly dollar, and it's breaking out on the third square. So this is very bullish and a
Mhm.
very steep angle it's covering. So the next support on this basis weekly would be around 112.20. So
Jives with the ABC.
yeah, it jives with that little ABCD that's not even here, right? So
Mhm. Yeah.
so it's a good one.
Yeah.
And we'll see how that works out. But there's not much to do here for now other than trade the trend, right? Trend is your friend here. And ABCD off the weekly goes up into that same area, 112, 112 and a half. So
It's bullish. That's all you can say.
yeah,
It's bullish.
It's bullish. And Euro bearish. Okay,
Yeah.
that's all I have to say. So, we had this big struggled rally up into here, failed, and then at that time we said if we can't make it above that, probably going to go visit the old lows, which we did. And now it looks like we're probably going to do, at least the next square would be 97. And yeah, so let's take square at a time. So basically it's weak below parity.
I mean, it's barely hanging on to parity. You can see each of those
It's
bars.
funny how parity happens to be 240 degrees down.
Yeah.
And how that vibe is working really well here.
Yeah, no question.
Next one would be the weekly euro. And I was keying off the high back in 2008. And boy, the ideal place would be 360 down. What would be better than that?
90, right?
We looked at those
90
last
cents.
week. If you guys missed it, you can check that one, but that would get us down to 89, 90.
Yep.
But for now, the half square, losing this would pretty much open up all the way down to here. But it might consolidate here for a little bit, which is 98.7, right? Basis weekly. Outside of that,
man, you look at that chart.
That 360 looks really good, and if it does that, it'll be really kind of a perfect square, perfect geometry. So we'll see how that goes.
You look at that chart, and it's going to be a long, cold winter for the euro.
Yeah,
and Euroland. It has nothing to do with their energy either. Just look at that currency chart, and that tells you everything.
Right. I mean, it's just bad in so many ways.
Mm-hmm.
And we'll be 90 down, of course, around that 13th again.
Mm-hmm.
Well, no, this is the 26th.
26th.
Yes. This is a weekly. I'm sorry. Yeah,
it's still the week of the 26th. Yeah.
And 26th, 29th, I think we have some cycles, so it's possibly coming to that.
Yeah.
All right, that's all I got for this week.
Excellent
back
review.
To you, cover the commodities. All right.
Sounds good.
And if you guys like our work, please click the likes and share and help us grow, and do the reminder alert.
Right.
What else can they do? That's about it. Just
subscribe.
And if you guys have other levels or comments about the chart you're working with, feel free to comment. We'll check it and we'll answer as we can in the next couple of days. All right, let me put it back to you.
Excellent.
Well, so much for that half square, Ben.
Right? Like knife through hot butter.
Mm-hmm. Where we left off last week.
Yeah, we left off. We were going to see, are we going to hold here at the half square or not? Well, we got our verdict. Now we're down to the full square, and the full square you're looking at called 11,900. That's do or die. Because if we lose that and get stuck under here, we're going to be visiting the lows, and most likely those will fall if we get that low. So the most important level next week is this 11,900. Hold it. We can bounce. Lose it. It's looking like The
New
odds are going to be,
lows.
yeah,
That's what it looks like.
new lows are incoming. That's right.
Mhm.
Some of the things I was messing around with some timing dates. This was a high to low from the March high to the June low. If we did that again from this last high we just recorded, you're looking at November 2nd. If we do a 90, which would be similar to the 80 of that initial thrust from the all-time highs to the first low in March, that would take us out. An 80 would be around middle of December, and a 90 would be around Christmas, around December 20th, 21st. 147, I said if we did the high to low of this whole move, if we just repeated that, you're looking in March, early March. It's just some timing stuff that I was messing around with, but I think unequivocally we're weak. The place where you can say, okay, we've got some room to breathe is if in this, call it 12,500. If we can get above and clear that, then we can at least go up and challenge the full square. But right now, if we get stuck below here, that means a test to here, and you lose that, it's new lows. Do you have anything to add here, or is it pretty clear?
No, it's clear. I mean, it basically a good strong downtrend, and there's only a couple of support levels to watch. So yeah, it's clean.
Yeah, it's pretty clean and pretty clear. Now for the commodities, as I said, we're going to talk about wheat, corn, and soybeans only this week. And the reason why, and I put out a tweet midweek, for about 3 straight days this week, pretty much every single thing I watch on my screen was red. Bonds were red, stock indices were red, all the commodities were red. And I was like, wow, what is going on? It's just selling. And in the review this weekend, this morning when I was doing the review for the show, all the commodities except for wheat, corn, and soybeans are in either a correction phase, or they made a high and now they're correcting pretty hard. Like we saw, cotton had a pretty hard sell off on Friday late in the week.
Right.
Crude, you talked about crude. Copper did the same thing. And so the only thing and the money I didn't see flowing anywhere else. It wasn't like it was coming out of commodities going into stocks, or coming out of commodities going into bonds, or anything that made sense. It just looked like it was coming out. And the thing that the conclusion that I came to in my mind was that they're raising cash ahead of something. What? I don't know. I have no idea. Thought it might have been the employment report. Now that actually flipped things around a little bit. But so for some reason, big money middle of last week for 3 straight days was raising cash. And it turned all these commodity charts into, okay, we got to pull back and wait and sort of see what happens. See if we make higher lows, see if we hold support, what's going on there. The only ones that are semi set up are the grains. And I was thinking about it, I was like, why would that be? If everybody's raising cash in front of some event or some demand destruction or recession or depression or whatever the narratives are out there, I try not to get caught up in them. People still have to eat. You need wheat, you need corn, you need soybeans. There's no demand destruction on food. You have to eat. So maybe that's why these guys are holding up, and maybe that's why, we were seeing what was going on. It doesn't really matter to us what the reason is. What matters is levels and price action. And right now it says we got to keep our hands in our pockets for the rest of the commodities and focus in on the grains right now. And I'll show you why on the grains. So here's wheat. Wheat, the story was we made this spike high on the Russian invasion. These little bars here are limit up, gap up, limit ups. And then we've been correcting since. We had sort of a choppy multiple drive pattern to a low I thought it was 3 here. We got 4, and then we got the 5th. And this really looked like the clean out move, right? Took out the stops here on these lows from early 2022. And then we had a nice move up off of it, stalled at the half square, and now we pulled back. So here, what I'm watching and watching closely is, do we hold this half square? Call it 770, 772 area. If we hold that and get a higher low and can reverse up, we could start the new uptrend in wheat. It did get stopped, dead cold on the half square, which is okay on the first test. What's important now is what happens next, right? Do we get it? Do we get a higher low off of this? Do we hold this full square support? If the answer to those two is yes, and we reverse up, you could potentially be catching a nice 3 here.
Right.
So that's wheat. It doesn't look disastrous. Most of the other commodity charts, the move that we're seeing is something like this, where we made a high, pulled back, made a lower high, and we're getting this kind of movement. But this is a little different. We've been hammering out a bottom for 2-3 months now. Late June, all of July, all of August. So let's see how it plays out. Let's see if we hold support, and then let's see if we turn up and can break through that half square. But at least we've got a basing pattern that's forming here. Anything else to add on wheat?
Well, I think as long as it's above the lower full square, it's in decent, I would say, more or less safe conditions. But looking at my chart, we really need to clear, like, I don't know, like 827 to the upside to sort of get things rolling. So wherever that falls on your chart.
That's right about here.
Right around there. Yeah, we need to clear that, which would more or less clear that trend line, and that ought to set things up. But it looks like this could be a window.
Yeah, we have to watch it.
If we take out the like 827, 828.
And interestingly enough, this bar was inside on Friday. A full reversal now on the daily would be 835, which is not far from your 26, 27 level.
Right.
So that's wheat. Let's go check out corn. Corn's the most bullish of all 3 of the grains that we cover on the show. You can see we hammered out the low here, had a nice move off. Now we've been battling for pretty much all of last week. We were battling at this full square. Closed the week under it, so we got to look for weakness. So what I'm watching here is, where does this next low come in? Can we hold the half square? The half square here is, call it 640, 642. Can we hold that half square? Because not only would we hold the half square, we'd hold this trend line off the low, and that could give us a point to move up. Do we pull back all the way here to the full square, which is around 615? Either way, that would be fine, because remember, we're working off of this low here, and you have this whole structure as you were hammering out the bottom, that if we did pull back to 615 and hold here, you're sitting on top of that whole structure there. So corn, while the most bullish, again, we're looking to see what does the price action tell us in whatever panic or liquidation event that may or may not be coming in the next month or so. How does this hold up? Where does the low come in? Because again, this is the strongest going into this mess. If it can make a good low on support on one of these important levels, it gives us a nice opportunity to get involved with the market. Anything else you have to add on corn?
Well, we are making nice, clean higher highs and higher lows. So the trend looks fairly solid. Coming off the high, we came down 135 degrees, at least on my charts, and then so far, I think for now, as long as we're above, let's say 645, I think corn's in a good spot. What's that about your half square?
Right about the half square, yeah.
Yeah, so long as we can hold above that on any kind of a consolidation, I think I mean, our signal was at least, I looked for it was when the last high got taken out on the 12th
Right.
last month, right? So once that got taken out, we're off to the races. So if we can hold the pullbacks above that half square line, I think we could be forming something.
Yeah, it's a chart that has shown us it's doing things it needs to do since this low came in. Higher highs, higher lows. Now we're just looking to see, okay, we've come into an area where, it's met resistance at this full square. It's failing at this square. So now this next pullback tells us, is this market really in a bullish position, or was this just a counter trend that's now getting sold again?
Mm-hmm.
I think the weight of the evidence, it's bullish, but we're going to let the price tell us and give us confirmation on this next pullback. And so that's corn. The other thing to look at here is you have weekly support at around 621, which is close to, but not quite at the full square. So if we did, as I said, if we did pull back to the full square, you'd also be looking at sitting on weekly support there as well.
Mm-hmm.
So corn looks bullish to me. And then the last one we'll cover today, beans, is interesting. And I picked this up today, and this is kind of the setup that Barrie likes, because when we first saw this setup here on the way down, when we were sort of zeroing in on the low, we had an ABCD down into half square support. And look what happened immediately off of that.
Mm-hmm.
Nice move off. We've been chopping around since, and look what just happened on Friday. We have an ABCD down into full square support this time. So this one, if you look at wheat and if you look at corn, this one's a little further along, right? It had its initial thrust up. Now we've got a firm pullback back. And look at the bar on Friday, Barrie. Look at this. Opened at the low, closed at the high.
Right.
Completed the ABC on support. I think soybeans of the three grains looks the most ready to move. I don't know why. I don't know if there's issues with the crops or a crop report or something coming out. But this pattern is one that you can see, at least in beans, there's a pretty strong reaction when you get it. So I think beans look really bullish. I think this ABCD completing on support gives us a good spot where risk reward is really, really strong. Because if we have in fact turned and we get, an up bar and can take out, a previous day's high, Friday's bar was inside. So an up bar would be 1433, clearing, taking out 1433.
Mm-hmm.
This thing could be off to the races. Comments you want to make on beans?
Beans, well, we did from that ABCD completed in 30 days.
Mm-hmm.
Okay, so that was a pretty good count. And now we have a 30-day cycle low to low. Okay, low to low, right? So
Mm-hmm.
it's possible that we turn here and we give it another shot. So I think this is a point where we could find some support. And we did a little bit of a false break on that.
Yes, we did.
Right there, right?
Yep.
So it's possible, yeah. But I think for the whole thing to get rolling, we need to really clear, I don't know, 1445, somewhere in there.
45 for you would be up here, right in here.
Yeah, if we can clear that, I think the momentum will shift to the upside.
Mm-hmm.
And now it looks like a good low. We completed the ABCD. We got 30 to 30 cycle running. So I think the potential's there.
I agree. And I love the price action on Friday, opening at the lows, closing at the high. That's a really, right. In commodities, that's a really bullish sort of reversal signal. So beans looks good. That's all for the commodities because of what we spoke about at the top of this segment. Every other commodity I look at, we've talked about silver, we've talked about gold, talked about copper. On those three, I'm watching. I'm dropping down this week. I'm dropping down to a 4 hour and watching for signals on there because they've all had big pullbacks, and now they're driving up. And let's see if on this next pullback we can get a higher low on a 4 hour for those. Crude, as Barrie talked about and we alluded to, and nat gas have both rolled over, are looking weak. We got to let those things play out because from a monthly and a bigger picture perspective, they're still very bullish. The softs, sugar and coffee, are pulling back. Actually, sugar's in a consolidation, trying to break out. Cotton and coffee have pulled back off of nice moves off the low, so we got to let them play out. And cocoa's still stuck in this vicious monthly, weekly triangle, trying to figure out when it's going to break. When it does, that the amount of energy that's pent up there is fantastic. It's going to be huge. So on the commodity side, nothing has changed longer term. Still very bullish. Still like the commodities. Think we have more to run there, and we're going to cover that on the monthly show, which we're going to record as well this weekend and post. And I think if you're interested in commodities and you're interested in the bigger picture, make sure you watch that show because the monthly show does really give you a fantastic view of where the bigger trend is going.
Right.
Anything in particular you're focusing on this week, Barrie?
Well, the market for sure. Trying to see if we get a low in this week or if it's going to continue into next week, because we have a couple of windows this month, and watching bonds, see if we're going to go lower or if we're going to have a little rally off of here. Everything else is sort of dollars a given. Gold is still soft, not much to do there. Yeah, S&P looks like the main thing to watch here.
Right. And your forecast for the dollar, the work you've done on the dollar, if the dollar is going to be strong, precious metals and commodities are going to be under pressure. Right. So I mean, it's just what we've seen. So and the charts are telling us there was a lot of liquidation there, not just in commodities, but I'm saying the watching price action during the week, somebody with big money was raising cash. And we just have to see why in the next few weeks as things play out.
And also watching crude oil to see if that square of 90 holds, and if that goes, it might be a good trade to the downside. We'll see how that works out.
Absolutely.
So
anyway, have a great week, everybody. Barrie, have a great week. Good show. And let's see what the market brings us this week.
Thanks, Ben. Good job. We'll talk to you later.
Take care, everybody.
Have a good week, everybody.
All right. Bye-bye.
Bye-bye.